Can I file Chapter 13 with tax debt? Have you ever wondered if you can file for Chapter 13 bankruptcy when you have tax debt? This is a common question, and the answer is yes, you can. Chapter 13 bankruptcy is specifically designed for individuals who have a regular income and want to reorganize their debts, including tax debts, into a manageable repayment plan. This plan typically lasts between 3 to 5 years and allows you to catch up on missed payments while keeping your assets safe from liquidation. Let's break down some important points about filing Chapter 13 with tax debt. First, many types of tax debts can be included in your repayment plan. This includes federal income taxes, self-employment taxes, and payroll withholding taxes. To qualify for discharge at the end of your plan, you must propose to pay these tax debts in full during that time. However, not all tax debts are dischargeable. For instance, income tax debts may be discharged if they meet certain criteria. These criteria include being at least 3 years old, having filed the tax returns at least 2 years before you file for bankruptcy, and being assessed by the Internal Revenue Service at least 240 days prior to your bankruptcy filing. On the other hand, recent tax liabilities and tax debts related to fraud or willful evasion cannot be discharged. Before you file for Chapter 13, you must ensure that you have filed all required tax returns for the past 4 years. If you haven't filed these returns, it may prevent your bankruptcy plan from being approved. Once you file for Chapter 13, an automatic stay goes into effect. This means that most collection actions from the Internal Revenue Service, such as wage garnishments and bank levies, will stop. However, be aware that tax liens may still remain on your property until the tax debt is fully paid through your repayment plan. Another aspect to consider is what happens to any tax refunds you receive while in Chapter 13 bankruptcy. Typically, these refunds are considered part of your disposable income and may need to be turned over to the bankruptcy trustee to help pay down your debts. There are also eligibility limits to keep in mind. Chapter 13 is available to individuals whose unsecured debts, including tax debts, do not exceed around $526,700. Additionally, you must have a regular income to support your repayment plan. If you successfully complete the repayment plan, you will receive a discharge. This discharge releases you from personal liability for eligible debts included in the plan, which may include certain tax debts. In summary, Chapter 13 bankruptcy provides a structured way to manage and potentially discharge qualifying tax debts while protecting your assets. It requires careful planning, including filing all necessary tax returns and proposing a feasible payment plan. Consulting with a bankruptcy attorney can be very helpful in determining how your specific tax debts will be treated and guiding you through the process.